work Muathe with the ultimate Muathe breakout examples. Let's take a look at a monthly chart for HRT here, 2003 August, stock breaking out above 450, somewhere in that range in price. Nice breakout. The stock was already extended, having moved from $3 all the way to about $5 in 2003, but the breakout was above this level here with this monthly closing high, so investors could have taken note of that fresh breakout there. Let's take a look at what was happening in terms of the RSI. You can see that the RSI at that time, with the RSI breaking out to all-time highs, as you can see right there, moving above 69.10, all-time highs on the RSI. So something was changing in this stock's makeup, and you see that one of our MACDs was also giving us an all-time high right there. So the main MACD setting was moving to all-time highs. So let's take a look at what happens in the stock, and you can see that the stock would move from that $5, $4 area all the way to 47 in about 11 months. That's 1,000% gain in such a short time. Why? Because take a look at what the RSI was doing. Whenever you see a stock you own move the RSI to such a major RSI mountain above 69.10, this is exactly where money is made. I know most people are scared to own stocks whose RSI are trading in that range, but RSI is not a measure of how overbought a stock is. That is wrong. RSI is a measure of sentiment, and sentiment was very strong. RSI is a measure of love. The stock was being loved by the street. RSI is a measure of acceleration. Take a look at how this acceleration moved the stock to such unbelievable heights. So don't be scared of stocks that are doing that. I know Wall Street and the financial media and the financial technical analysis books, technical analysis resources, they always tend to use the word overbought. It's not overbought. It is just showing you strength. And I've tried to, teach my subscribers and anybody who's following my stuff on YouTube and anywhere on my material that just a little bit of research is going to show you that this is not a sign of overboughtness, if there's such a word. It is a sign of power. Now you'll notice on most of the charts I use 68 because at the time, as going back as far as 2004, I used to use 68 as the line on the sand, but I've since refreshed this after more analysis. The actual number is 69.10 instead of 68, but I used to use 68. Now I know for a fact it is 69.10. That's when things really accelerate, and this is a universal law. It's not just happening because it's the stock market. This is law, and once a law has been established, somehow it just keeps repeating itself over and over and over again. So whenever you see something like this, which I call a RSI mountain, don't be scared of it. There's money to be made. Okay, so even if you bought the stock at $12, you'd still have had a chance to see it move to 47. If you bought the stock at $20, and I'm not saying it's easy to time these things, but there are ways to time them, and I teach that, but you would have still made money. Point of the matter is, because we are learning about the ultimate Muathe breakout, is it was giving us a buy signal there and another one there, or moved with the MACDs moving to all-time highs and 3-year highs in 2003. That's why the stock blasted out of this range. Let's take a look at another one. SIM. Here's a stock that had been basing for a couple of months here, just under $8, and somehow managed or figured out how to move above that $8 range, breaking out in price right there. So breaking out, you're like, what's going on with the stock? Maybe I should take a look at this instrument. And this is exactly what you should do even in this current market. Any market, find stocks breaking out. So notice what's going on here. The RSI moves back above 69.10 when all this is happening. Price breakout, RSI moving above 69.10. Remember, that's one of our minimum requirements, at least one. And take a look at the MACDs here. The MACDs just about to break to all-time highs there, and also just about to break out there. Okay, now the other thing also I have to tell you this, because I know I might forget to tell you, is you take a look at the MACD, you're gonna see two lines, a black line and a brown line. Sometimes the brown line breaks out before the black line. So you can see in this particular example, the brown line was just about to break out, yet the black line was a little bit lagging. So sometimes you want one of these MACD moving averages to break out. That's all you need, one of them to break out, and the stock is in place. So after this, minimum requirements were met, and this was in 2006. Take a look at that. This moved the stock from $8 to $22 in about 6 weeks. That's a 200% return in about 6 weeks. Man, that's good. All right, so let's move on to another example. Lots of examples, but why so many examples? Because ultimately the idea is for you and I to refresh in our subconscious mind that this is what moves stocks. We have to repeat and repeat. We have to learn and see as many examples so we can convince ourselves, and so we can alter our beliefs about what moves stocks. So here's a stock, FCEL, and this is 2000. The stock had already moved from, broke out here in late 1999, breaking out above $4.50. I'm talking about this breakout here. So already broken out there. Let me go back to late 09, see what happens. Yes, late 09, RSI was moving above 69.10, and this is a monthly chart. So late 09, the stock was also breaking out, so there was a buy signal already late 09 with this RSI move above all-time highs there, and also late 09 an RSI breakout. So everything was lining up perfectly in late 1999, and the stock would break out. So it met our minimum requirements with this breakout here from $4.50 all the way to as high as $24. Oh, in about 1, 2, 3, 4, 5 months. $4, $24, 5 months. Mwah! Love it. So the stock settles again, and you can see here that it, after making that high, don't just ignore the stock. After it makes this monthly closing low, set an alert for this price, would have been about $19.50, $19, somewhere there. And the next time it breaks out, which it took 1, 2, 3, on the 4th month, as you can see, we have one down month, another month below this monthly closing high, and then another monthly close there, and then finally it breaks out there. You want to buy the stock. It's giving you a fresh buy signal. I know it's extended, looks extended. Who wants to buy a stock that is so extended? But it's breaking out again. Powerful stock breaking out again. What's not to like, I ask you? So notice what happens. RSI moves above 69.10 again. All right, this is a powerful stock. It already did this. It did this powerful move, and now it wants to do it again. Haha. Take note, and then notice what the RSI on what the MACDs are doing. Breakout here, bam, to all-time highs. So let's see what happens after that. This breakout was taking place in August 2000. Market in a bear market. Notice what happened. This was enough to take the stock from $19.50 all the way to $52. I don't know what the percentage return there is, but it's big. Why? Because the stock met our minimum requirements, back above 69.10 there. And also the MACDs were breaking out, already breaking out there and there. Everything was aligned. Hence, you get a chance to own a stock that moved from $19.50 all the way to $52 in about 2 months. 2 months. You double your money plus, almost triple your money in 2 months. Why? The ultimate Muathe breakout is why. Let's take a look at another example, and this one is 2004. Here's a stock. We're going to see 2 breakouts on this chart. After settling down here for many months, close to 2 years, it finally muscles its way above this price range of just under $10. Breaks out. Okay, so let's take a look at the quality of that breakout. Wow, that breakout was mucho fantastico. Breaking out here, all-time highs. Right here, this box. All-time highs on the RSI. I love those. I love stocks that give me all-time highs, all-time high breakouts. Take a look at what the MACDs were doing. The MACD was giving you another all-time high on the MACD. You gotta love that. All-time high on the MACD there. So 2 MACD time frames, MACD settings, giving you all-time high. RSI, all-time high. Oh my gosh. That was enough to move the stock initially from about $9 all the way to $27. $9 to $27 in 1, 2, 3, 4, 5, 6, 7, 8 months. Stock moved from 9 to 27. Now, as if that was not enough, it would settle down after making this high right there. So set an alert at about $25. Why? Because it closed there at 25 and moved lower for the next month. So you set an alert at 25 and just relax. Wait for the stock next time to break out. Now, for the sake of education, notice that it took it 2 months to finally close above that price. It tried here this month and failed. That month there failed to hold above 25. That month failed to hold above 25, which is this price. Could not close above that. It's only this month here that it finally broke out successfully. So what I'm trying to say is that stock market is confusing. Things don't work out all the time, and it is important sometimes for people like me who make these videos to remind you that the market is frustrating. And so if you are trying to use the principles here, the stock failed for you here, failed for you again, maybe you gave up, and it happens. I'm sorry, that's just how it is, but it happens. You know, this breakout here was almost very swift. This one struggled for almost 3 months before finally breaking out. Okay, so that's the reality. The reality is that breakouts are not always swift. Sometimes they fail, sometimes it takes several attempts, and here's a perfect example. So finally the stock breaks out, okay, and 25 was the entry point. Very nice move there. Let's see what the RSI was doing at the time of this breakout here in October 2004. You see that the RSI on the monthly was already trading above 69, very close to all-time highs, very close to an all-time high on the RSI there. And also the MACDs were already trading at all-time highs. The MACDs at all-time highs. So very powerful looking chart. And the stock would go on after that to trade from about this breakout here, which was very murky, or very, you know, it took a while before it broke out. But this moved the stock from 25 all the way to $90 in about 3-4 months. If you want to own an explosive stock, now as far as I am concerned, this is an explosive stock. $10, $90 in about 9 months. Another breakout from 25 to $90. That to me is explosive, as in explosive. All right, yeah, it's just an explosion right there. If you want to own a stock that does something like this down the road in your future, in your trading history, then the minimum requirements I'm talking about here have to be met. All right, let's go to the next example. And we're taking a look at another one here. Stock was trading HWG 2003 November. breaking out here just under $20, $19 breakout there. The stock seems like a low price stock. Average volume on the monthly 22,000, but I said volume to me is irrelevant pretty much. But notice what the stock was doing. In fact, the initial breakout was here, this breakout here at about 750, that entry point there, which corresponds to this RSI move above all-time highs. So the RSI was making all-time highs early 2003, so right there, all-time highs, and also a move above 69.10, and also looks like another all-time high breakout. Here's a stock that most people would say is extended right there, and yet it looks like it wants to make another all-time RSI high. An RSI breakout here will take it to a money-making all-time high. Okay, when the RSI is trading in this range, this is what I call money-making period. Money is being made. So the stock is breaking out here after almost 2 months of rest. On the 4th month, it breaks out above this monthly closing high there. So that's a new entry point for you. Let's take a look at what the MACDs were doing. Of course, the MACDs at that time were already making. So anyways, breaking out above $19, give or take. RSI trying to move to all-time highs. MACD is already meeting our minimum requirements. 2003 November. Take a look at what happens after that. So the breakout we're talking about was this breakout here, right there, that area I'm showing. Stock would move from $20 all the way to 160. Yeah, I know, that's what I'm thinking. Amazing. But take a look at all these all-time highs on the RSI. So there was indication of strength. RSI is not a measure of how overbought a stock is. It's just a measure of strength. I don't know how I can reinforce this. Take a look at this breakout here to all-time highs, which is this breakout. Another breakout to all-time highs here when the stock was trading at $50. Remember, the stock would go to 160. So isn't it obvious to you when you look at this chart that the RSI moving above 69.10 at a price of $7 and would stay above 69.10 until the stock was trading at above $130. So really, how can this be overbought here? How can right there be a measure of overbought when it's what I'm trying to teach here is that this is when you want to buy a stock. And this is a perfect illustration that what I am saying seems to be accurate. If you bought the stock when the RSI moved above 69.10, which is what I am saying there, and sell it when it moves back out of this 69 area, you would have sold the stock at 120. $7 to 120. Why? Because you understand how the RSI works. So that's another illustration that as investors we need to watch the definition for the RSI. The RSI is a measure of power, a measure of sentiment, a measure of love, a measure of acceleration. It is not a measure of how overpriced a stock is. It is not a measure of overboughtness. Okay, so for now let's digest those examples, and I'm going to continue the next video with more examples. But remember, only two things: RSI, MACD. Eric Muathe. Good luck, peace and blessings. I am out for now. Woo!